Hello and welcome to How to Trade the VIX, Understanding Key Market Relationships. I just wanted to mention that this video is copyright 2011, easyoptionstrading.com. Just a reminder that this video is being distributed on YouTube, so please bear in mind the publisher guidelines in terms of service when embedding this video or otherwise distributing it. Alright, thanks, and let's take a look at what's going on. So, what is the VIX? What is all this stuff they're talking about with this fear index or fear gauge in the market? Well, in truth, the VIX is mischaracterized by common traders as the fear index. What's really going on is it represents the balance between a set of puts and calls on the S&P 500 index, and it's calculated in real time. What this means is that this algorithm is watching the outstanding puts and calls being traded on the Chicago Board Options Exchange in real time and computing an implied expectation of the volatility of the market for the next 30 days. In particular, it tries to give an idea of the direction of the market the next 30 days. The takeaway that you should have from this is that a rising VIX index indicates an increased expected volatility in the market over the next 30 days. Alright, so how do I use this information to make better trades in the market? Well, first of all, the VIX is useful as a market indicator. It maintains an inverse relationship between the VIX and the S&P 500. What this means is that upward movements in the VIX likely imply a fall in the S&P 500. This also makes it useful as insurance against loss of gains. For example, a VIX index would expect to rise, or the VIX ETF would expect to rise as the market is falling. So if you think that the market is at a peak, you could buy in on the VIX ETF, and as a result, if the market falls, you would reap some gains because the VIX would obviously be rising as the rest of the market would fall. But at the same time, trading the VIX and going long the VIX when the market is at a top allows you to hold on to your main investments, so you don't have to reduce your overall position, while at the same time kind of making a hedge against a market reversal. This VIX also gives an indication of the sentiment of the market in real time. We talked about that before, in that we were explaining about how the algorithm is constantly calculating in real time what the trading activity is on puts and calls in the market, and so this really gives a real-time indication of what's going on with real live traders, as opposed to market analysts or just somebody doing guesswork in front of a TV studio. Well, I think that wraps it up for this video. I hope you've enjoyed watching it, and I hope you found it informative, and I hope I've taken out at least some of the mystery of the VIX index and what it's useful for and how to make use of it in make better trades in the market. For more information, including a chart on a plot of the VIX index versus the S&P 500, visit http://easyoptionstrading.com. Just do a search for how to trade the VIX at the site, and you'll pull up our chart and the post we've made on it. Alright, thanks, and I hope your trades all land in the money. Just as a reminder, this has been How to Trade the VIX, copyright 2011, easyoptionstrading.com. Thanks again for watching.